Folks, I believe this company is one of the most misunderstood stocks in America right now. Almost every single person watching this video has used this company's app. You have it on your phone right now, and yet the stock is down 27% from its all-time high. The CEO just delivered a soft profit guidance that sent the stock falling 4% in a single day. The CFO is leaving the company, and one of the most disruptive technologies in human history is pointed directly at this company's core business model. But here is what I think the market is completely missing. This company just reported $52 billion in annual revenue, up 18%. They generated $10 billion in free cash flow in a single year. They have 200 million monthly active users completing 40 million trips every single day. And their CEO just said something that changed how I see this entire story. He said we enter 2026 with a clear path to becoming the largest facilitator of autonomous vehicle trips in the world. Not competing with autonomous vehicles, facilitating them, and 4 days ago they just signed a $1.25 billion deal that is the single most important signal of what this company actually is. A deal with an electric vehicle manufacturer to deploy 50,000 robotaxis on their platform. Stay until the end, because at minute 6 I am going to reveal the number from their most recent earnings call that Motley Fool says implies a 250% gain from current levels over the next 3 years. Now I am going to present my case, and then I want you to go do your own due diligence and be your own judge. Make sure you subscribe right now and hit that bell icon. Every single day I bring you the freshest stock analysis here on Stock Alerts Daily. Do not miss a single one. Now let me tell you what this company actually is. Because most people think they know this company. They think it is a taxi app. It is not a taxi app. It is the world's largest transportation network. The infrastructure layer that connects 1 billion people with transportation on demand across 150 countries. Think about what that actually means. When you need a ride somewhere, you open this app and a car appears. When you need food delivered, you open this app and it arrives. When a small business needs a shipment moved across the country, this company handles the logistics. When an autonomous vehicle company builds a robotaxi fleet, they need a platform to connect those vehicles with paying customers. And right now, every autonomous vehicle company in the world is coming to this company to do exactly that. The company has 3 core business segments. Segment 1, Mobility, the original ride-hailing business. $8.2 billion in revenue in Q4 2025 alone, up 19% year over year. 200 million monthly active users, more than 40 million trips every single day. And in cities where autonomous vehicles have been added to the platform, overall trip growth accelerated. Not just autonomous trips, all trips. Adding autonomous vehicles to the network makes the entire network more valuable. Segment 2, Delivery. $4.9 billion in Q4 revenue, up 30% year over year. The fastest growing segment of the business. Food delivery, grocery delivery, pharmacy delivery, retail delivery. The delivery business is scaling faster than the ride business. And in the Europe, Middle East and Africa region, delivery growth last year was the highest of any region in the world. Segment 3, Freight. The logistics and trucking marketplace connecting shippers with carriers across North America, already generating hundreds of millions in revenue, and positioned to benefit directly from the reshoring trend as American companies move supply chains back from China to domestic and nearshore production. Now the profit picture. Full year 2025 revenue $52 billion, up 18%. That is 18% growth on a $50 billion revenue base. That is extraordinarily rare. Free cash flow for 2025 was $10 billion. $10 billion. For context, Apple generated around $100 billion in free cash flow, Microsoft around $60 billion. Uber at $10 billion is now in the conversation with the most cash-generative technology companies on Earth. Gross bookings for 2025 were $193 billion. That is the total value of all transactions flowing through the platform. Operating income for Q4 2025 grew 130% year over year, and the forward price to earnings ratio on the stock right now is approximately 22 times 2026 earnings. That is actually cheap for a company growing revenue at 18% and free cash flow at 20%. Now the news, and this is where the story becomes genuinely exciting. News item 1, March 19, 2026. $1.25 billion Rivian deal. 4 days ago, this company announced a $1.25 billion partnership with an electric vehicle manufacturer to deploy 50,000 custom-built electric vehicles on their platform. These are not just regular cars. These are vehicles purpose-built for this platform with screens in the back for media entertainment and advertising. This is the most important signal of what this company is becoming. Not just a software platform on top of other people's cars. A vertically integrated transportation network with its own hardware fleet. News item 2, NVIDIA partnership. This company partnered with the most powerful company in artificial intelligence to deploy autonomous vehicle technology across 28 cities in the next 2 years. 28 cities, starting in Los Angeles, then Houston, San Francisco, London, Munich, Hong Kong, Zurich, Madrid, and more. By 2029, the CEO said this company intends to be the largest facilitator of autonomous vehicle trips in the entire world. News item 3. Wave and Nissan Tokyo Robotaxi. This company joined forces with a $1.2 billion funded autonomous vehicle software company and a major Japanese automaker to launch a robotaxi service in Tokyo. Pilot program scheduled for late 2026. This is the first major autonomous vehicle partnership in Asia, and it will not be the last. News item 4. Q4 earnings beat revenue, missed EPS. Q4 2025. Revenue of $14.4 billion beat estimates, but earnings per share of 71 cents missed the estimate of 79 cents. That miss is why the stock is down from its high. The market is pricing in near-term profit pressure as the company invests aggressively in autonomous vehicle infrastructure. That investment pressure is temporary. The revenue from that infrastructure is permanent. News item 5. Uber One membership growth. At 40 times earnings, which is still reasonable for a company growing earnings at 20%. The stock would be worth approximately $294 per share. See you tomorrow with another fresh analysis. Do not miss it. And as always, nothing in this video is financial advice. This stock is shared for informational and educational purposes only. Always do your own research. Always check NASDAQ.com for the current price before making any decisions. Investing involves risk, including possible loss of principal.